The following content is an update and technical analysis on crude oil, West Texas Intermediate futures based upon the daily interval, followed by a very significant update on the 240-minute interval, where I believe are now critical junctures and or very significant developments within the technical momentum indicator space, where we had some big headlines fundamentally rock some of the crude oil markets, with the OPEC Plus now soon discussing the possibility of implementing further reductions in oil supply during their upcoming meeting next month, where members, including Saudi Arabia and Russia, have committed to a collective cut of 5.16 million barrels per day, equivalent to approximately 5% of the entire world's daily demand. And additional cuts could be on the agenda, as suggested by two other sources within OPEC Plus. And here we are, I believe, in a significant crossroad within the technical daily interval. Here on this previous highlight of the crude oil West Texas Intermediate futures in crisis, analyzing the black gold crash and what was to come next, here on the 7th of November 2023. And we had additionally hyped up this primary reactionary uptrend line. The bottom of this bullish falling wedge pattern had its very significant reaction and offered a great risk reward ratio short trade setup to the downside, which was good for a very prolonged drop, big move to the downside, more than a double-digit crash. And it would be time to begin short covering the process, and especially look out for a bottom tagline of this primary trading range. Very significant development and a crucial support level that was preceded with a multitude of reactionary highs and lows really across the entire sphere there, where I believe it was a critical crossroad for any algos, machines, and or computers, big institutions to load up on crude, go long, based upon this additional primary reactionary uptrend line. Call it a multi-year price support level, very significant reactionary lows right across that entire juncture, coinciding with the 73.20 price support. Call it a triple line of inflection points. And here's the update. Especially if you're an active and or day trader, really to the button, honing in on for a big move, reactionary low, tag that primary support level for a 1% move to the upside in a single day, carried by an additional secondary continuation rally, big move to the upside for 5.19% in gains to the upside. Call it a very significant short covering rally, and fundamental catalysts that are starting to really churn to the upside. But again, that level was successfully defended right at the 72.70, a price support, coinciding with the bottom of this primary reactionary uptrend line, a very significant level, and that was preceded with a ton of technical traders. And that level was defended heavily by long traders and or bull traders, especially when we had that additional reactionary low, last chance to get in on a backtest retest of the 72.20 price support, coinciding with the 786 fibs retracement, and was lights off to the races and a big, huge move to the upside. I have added this new primary reactionary downtrend line based upon the late October reactionary highs here, and that will be a significant development and or backtest if and when we go on to retest that key inflection point. Call it around the $76, $77 range, where long traders, bull traders, they want to see a final breakout. It was very bullish that we got this monster green candle, solid close up above resistance off that 75.27 price resistance, which now becomes support. And bull traders, long traders want to see a solid breakout above that primary reactionary downtrend line to go re-challenge the 618 fibs retracement, coinciding with the 200-day moving average. Call it a dual transitioning line of support there. As far as any divergences go, we do have stochastics 1033, a potential positive divergence here, where there was just a ton of technical damage that was infused into the indicators upon retapping and backtesting that short trade setup, which was good for a solid 20.5% crash to the downside. And I believe the odds are significantly starting to shift in a sentiment and or paradigm shift, which could infuse a much larger trade to the upside on a long trade setup. Whereas short sellers, bear traders, they want to see a solid rejection amongst this primary downtrend line, keeping the selling pressure intact to go on to re-challenge the 72.70 price support, call it dual line of transitioning its price support levels, with a solid red candle close, solid daily candle close breakdown below that key inflection point, ushering in a major price sell signal and only infusing more damage into these technical momentum indicators on a re-challenging of the 70.09 price support. Zooming you into the 240-minute interval, and this is where I see a significant bullish development with a confirmed bullish divergent low. We have positive and or bullish divergences in all three technical momentum indicators here, with a confirmed bullish crossover here in the moving average convergence on a potential re-challenging of its zero line threshold. Long traders, they want to see a solid breakout above the 4-hour 50-day moving average and this new parabolic downtrend line, reactionary high downtrend line, with just a nice clean reaction right across that sphere, correlated with the 236 fibs retracement called 7646 price resistance, which will coincide with a triple transitioning point of 240-minute price resistance. Bull traders, long traders want to see a solid daily candle close breakout above that key inflection point, ushering in an additional buy signal to go on to re-challenge the 77.53 price resistance, and then ultimately the 382.7904 price support, and then and even bigger price resistance up upon the 83.19 618 fibs retracement, and that would be the ultimate, I believe, a final price long trade setup target, and that has a ton of reaction right across that sphere, just all across the board with reactionary highs, reactionary lows, all across that entire. Where again, long traders, bull traders, they want to see a solid rejection here, correlated with that primary downtrend line that I showed you on the daily interval, and a close big rejection on a rechallenging of the 0 fibs retracement, call it 72.31 price support there, to go on to rechallenge the divergent low under bullish divergences that are intact as of now. But taking this level out will be exceedingly bullish, because then you'll go on to rechallenge the zero line thresholds here in the technical momentum indicators, and recovering the zero line thresholds could spell for a much larger move to the upside, only squeezing shorts out, fueling an MBS comeback in price.